Well, let's get across the market open now. Greg Smith joining us from Generate Investment. Greg, happy Monday to you. Now, let's start with how you've opened there in New Zealand.
Yeah, hi Andrew. Great to be back again. Happy Monday to you as well. So a bit of a soft start for us on the NZX 50. We're currently down 0.4% at 12,910. We didn't haven't really partaken in the global rebound over the past sort of 6 to 7 weeks, but luckily we're all global investors, so enjoying that. But yeah, soft start today. We've got Fish and Paykel that's down around about 1.4%. Airport's down around about 1.2%. Quite a busy week ahead. We have got 12 companies reporting from no big ones, but we've got some property companies. We've got Napier Port. We've got Tower Insurance and Turners Automotive. So there's a few things there in terms of corporate leases this week. But yeah, generally the mood is probably still, I would say, pretty somber.
So let's cast our minds back to Friday, and in fact, it was very much risk off on global markets, particularly Wall Street came off quite heavily there. Obviously, we've seen record after record. Why that shift in sentiment, do you think?
Yeah, I suppose the markets have had a huge run, really, haven't they, since sort of the end of March. Yeah, staying the course. That was sort of the mantra we've talked about a few times on this program, and that was the right way to go. But yeah, hitting record after record high, as you say, and quite different from the bond market. Yeah, the bond market is more worried about inflation being stickier, about the conflict lasting longer, and about the fiscal side of things as well, with defence spending and the like. But yeah, the equity market sort of shrugged that off, and I think. Yeah, a large part of the reason is, the data's been quite resilient. Obviously, we had the manufacturing data, like the New York print on Friday in the US, and generally sort of factory activity is roared back as well. Inflation's also roared back, but the earnings season's been really strong, hasn't it? Over 80% of companies have beaten earnings. But when does that sort of run out? Quite a pivotal week, I think we're looking at this week in terms of lots of retailers reporting in the US, including Walmart, and of course, the daddy of them all, Nvidia. So, is it going to keep that story going? The tech sector has certainly shone so far in the earnings season, growth running about sort of 40 to 45%. So it'll be a key test. But yeah, I think market's probably just taking a bit of a breather, and yeah, still that uncertainty, isn't there? I mean, Donald Trump says he's losing patience. He's trying to put on a brave face with putting some positive spin out of that meeting with China. So yeah, maybe markets are just getting a little bit wary.
Greg, just how important is this Nvidia result coming up this week, given it's managed to beat pretty much every time? But of course, that puts a lot of pressure on expectations there. Well, how do you see this?
Yeah, I think it's important. I would actually say it's probably not as important as it used to be maybe a year or two ago. You've got some other leaders taking over. I'm seeing lots of other the Mag 7 names and companies like Micron and SK Hynix and all sorts of chip makers, share some of that limelight. But yeah, still very important. I mean, obviously, we want to know about their forward orders and what the demand's like. That's been very, very strong. One thing I'd also say, interestingly enough, when you look at the rate they're growing at, 60, 70% or whatever it might be, you reflect that back to the valuation at sort of, in the 20s still. It's actually still not overly expensive, but I think, if it comes out with a good result, but it's a little bit below expectations, then you could see a sell-off as you do, and particularly given the sector has had such a good run over the past, since pretty much since the start of April. So I think it is very important from that regard, but also don't underestimate the importance of these results from the retailers either. We've got Home Depot, we've got Target, we've got Walmart. How's the US consumer shaping up? We know we're paying a lot more for fuel. Fuel costs in America at the pump have gone up around about sort of 40 to 50%. What's that looking like? Some of those discounters might be doing okay. I'm sure that trading down is going to be sort of accelerating a bit. But I think that's important as well. But yeah, Nvidia's certainly going to probably be the highlight of the week.
Wait, Do you see that oil remains the biggest risk to markets globally at the moment? Obviously, it jumped to around 3% on Friday. Prospects of an end to the war still look a long way away at this point, and of course, critically, still no movement in terms of reopening the Strait of Hormuz.
Oh, for sure. It's super important, isn't it? And obviously, Cass, I was just actually looking through the documents from your budget earlier, and obviously that featured heavily in terms of the scenarios where the conflict lasts, and you see oil price spiking up, and then you've got things also like fertilizer as well. So yeah, it's really important. I think throughout the last sort of 6 to 8 weeks, equity markets are taking a more optimistic view, bond markets less so. I think it's interesting looking at the oil futures market still in backwardation. So a couple of years out, you've still got oil sort of trading it back towards sort of $70. So yeah, it's a great unknown, isn't it? I mean, I don't think anyone sort of can profess to know, but the longer it drags on, the longer it becomes problematic. And I think the really interesting thing will be, and we've got the FOMC minutes this week, but it feels like central banks generally, obviously, your own central bank has put up rates, but central banks generally are sort of giving it the benefit of the doubt. It's waiting and seeing. But at some point, they'll have to go, hey, this is going to be a problem that's here for a while. So, and how long that is, I'm not too sure. I mean, you would think it's probably not going to be much more than a few months. So, this conflict is still sort of rattling on, and August, September, I think it could be, a very different story for sort of interest rate trajectories. But then again, they have to be also balancing that against the growth side. So I think it's really important, Andrew. But how oil is moving is really a reflection of a lot of sound bites. Donald Trump saying that he's getting impatient. That suddenly oil price is up again. So it's a really difficult one. But the longer it drags on, obviously the more impact there's going to be, particularly the central bank thinking.